Hello, everyone. As promised, live analysis, live commentary. So we're gonna scan the markets as we used to be. We used to do. Sorry, sorry, I'm a bit out of steam today. So, as promised, we're gonna have another live analysis before the end of the week, and we have a weekly wrap up with Stuart tomorrow. So. An overview of what is going on in the market, how any weekly analysis that you need to be aware of to prepare yourself for next week, and so on and so forth. But I couldn't not do this live analysis today after what happened with FOMC yesterday. So let me just make sure that the audio is fine. I think it should be okay, but it captures sound, so it should work properly. Okay, so before, I'm gonna show also the dollar index, and here we are. I'm gonna start with the biggest mover so far today, since yesterday, which was dollar index. Even though we have seen also a lot of big rallies or big declines, drifts, if you prefer, to other currencies as well. Because what happened with FOMC yesterday, the fact that Fed came out unexpectedly hawkish. It wasn't something that we the markets were expecting. So the fact that it came out unexpectedly hawkish is what it caused that risk-on environment that we have seen so far today. Since yesterday, after Fed. So what risk-on environment means? Just a quick reminder. Risk-on environment means that has a consequence the pressure on treasuries. Stocks tend to appreciate on the risk-on environment, while the safe haven currencies tend to being under pressure as well. So Swiss, yen, gold. So commodity. Something that I missed. It was the pressure on commodities as well. So pretty much not the theme of the week. The focus this week is on commodities and dollar. These are the assets that they have moved the most. So dollar crosses, commodities, and so on and so forth. So this is the dollar index. But before we see the technical side, I would like to quickly explain a bit what is going on with the Fed, even though it's backdated news, but just briefly for people that they might haven't understood so far what happened and why we've seen all these sharp moves so far. So pretty much as I said, we weren't really expecting for the Fed to come hawkish. So what that means, the Fed changed a bit his tactic yesterday. So it brought back into attention the okay. Thank you, Stuart. I noticed. Sorry, I missed. I didn't put the charts on. So I can see your question now. So gold. Okay, both of you, Daniel and Rakuman is asking for gold. Okay, let me quickly have a look on dollar, and I promise that gold will be the very next one that we're gonna see together. Just give me some time to explain a bit the Fed briefly, very briefly, and keep an eye also on the jobless claims that released just 30 minutes ago, and they came out for the second time in a row, for a second week in a row, worse than what was expected. Lower what was expected. So, as I was saying, why we claim that there is a risk-on environment after the Fed, and why we stating, and everyone actually is stating that the Fed sounded more hawkish than what was expected, is because the Fed, despite the fact that it didn't really change much. However, the commentary, the statement, and the fact, more precisely, that they are bringing forward their interest rate predictions to early of 2023, and talking about tapering. Tapering's bond purchase program is what actually caused all these sharp all this support and this rally in dollar. And if I just quickly shift, and what has caused also this, this pressure, this kind of a sell-off initially on the equity markets as well. So the Fed actually, by actually discussing about prediction of interest rates, bringing forward the interest rate to 2023, and all the talks about tapering was what it caused U.S. Indices, but in general the equity market all over the world entering a kind of a sell-off yesterday. A bit stable so far today, sideways movement, and has supported significantly, as we were watching earlier, the dollar index as well. But where we were? Okay, yeah. So Mr. Powell actually yesterday tried to push away a bit of his worries over the policy shift, this inflation worries that it's the hot potato of the year. However, it didn't manage to do much. So unfortunately, the worries around the policy shift remain the prime driver of market direction so far today, and it could remain the main driver for the rest of June. So, what am I missing? Am I missing something? I think not. Let's quickly shift to what with releases that we have seen from US earlier. So we had jobless claims. So the jobless claim came at 412,000 from the 359,000 expected. So we have a miss of expectations. So what that means that more people have applied for the first time for unemployment insurance. So this is actually a negative report. It's the second week in a row that this is happening. So it seems that even though we had seen the last few months, or if you prefer in 2021, some very, very big numbers in NFP releases, and we believed, and actually the market actually priced the recovery in the labor market in the US. Apparently, that is still a lot of pressure. There is still the labor market is struggling to get back to a continuous growth. So if the jobless claims continue like the next week, if they continue to miss expectations and actually increase, then this could put some kind of a downside risk on the NFP for June. Okay, this is something that you could put a note on. So yeah, that's a negative reading from the US initial jobless claims. So this theoretically could have weighed on the dollar. However, all this, as I said, as policy shift remains the main driver, it didn't really have a significant impact on the dollar. As you can see, let me zoom in a bit, and I will put even the 15 minutes chart. Okay, here we are. So the data came out at 3:30. So prior to the data, we have seen the dollar drifting a bit lower and closing this 15 minutes candle on the data releases dodgily. So it didn't really impact significant. Actually, didn't impact at all. To be honest, the dollar index. So we have seen dollar index trying to get back to where it was initially prior the data, back to 91.81, already at 91.78. So it seems that the let me zoom out, going to 1 hour chart. It seems that the main driver remains the this support that has been noticed, this bullish momentum that has been seen after Mr. Powell, actually during the Mr. Powell's statement yesterday. So dollar index, I will start with the daily chart, and you can see how big or nearly full body candle we have on yesterday's session and so far today, even though today's candle hasn't closed, so we don't really have a confirmation over here. However, as you can see, the asset remains on the upside since that should be Friday, if I'm not mistaken. Yep, since last Friday, jump yesterday outside the Bollinger's, closing actually outside the Bollinger's and remain on the outside the Bollinger Band area so far today. This suggests an overbought condition. However, if I just shift to the 1 hour chart or even the 4 hour chart, they're both similar. The indicators are quite the same for both of the time frames. So as you can see, intraday, the bullish momentum still holds. So despite the fact that so far it's been like overbought and looks to be overbought in a daily chart, intraday we can still see bullish momentum holding quite decisively. If you just check over here my MACD, which it might be, look at, okay, just let me stretch it a bit so you can see that MACD lines remain well above zero, also above signal lines. So after we have seen this bullish cross in MACD lines, this bullish cross keep extending to the upside, supporting the bullish intraday scenario, while the both RSI and stochastic have actually turned to the overbought condition and flatten. So that's suggesting consolidation intraday, but we don't really have so far a reversal confirmation or something that trigger the attention for a pullback. So flatten RSI into the overbought condition. No, so that's suggesting consolidation. Stochastic, the fast stochastic in the 1 hour chart also is within the overbought condition, but we don't have a bearish cross implying to a reversal yet. So momentum remains intraday, remains positive intraday. So 91.80 was the high so far this week. Okay, while this is the asset is just a breath away of the 200 exponential moving average. So the 200 exponential moving average in the 1 hour chart is just 5 pips higher. Let me just double check the simple daily moving average, which has already crossed. Okay, that's quite interesting. Actually, this is the first time. Just double check something. It has broken the 200-day moving average back in March. It didn't. The breakout didn't last for long. It reverted quickly lower just 2 weeks afterwards. But we need to keep an eye on it. It looks overbought. Eventually, we need a correction. However, as anything, if it sustains and move above 200, then we could see the asset could potentially retest the next resistance level of 92.50. So yeah, that should be okay. Let me put my Fibonacci on, so you can see that it already reversed more than 40. Yeah, that should be actually, yeah. It has already reversed more than 50%, actually nearly 60% of the decline that we have seen the last 2 months in a row. So that should be April, May, June. So 2.5 months. So you already reversed more than 60% of this decline. So just a summary. In the daily chart, in the medium term, DORA looks overbought, so there is the need of a correction, of a pullback. It's already overbought for 2 good sessions in a row, while intraday positive momentum holds. Now, let's flip to gold since you asked for it. And let me find my gold. Gold. There we are. And actually, interestingly, I will send the. I will start with the weekly chart. I know that you might not be interested on weekly chart, but it's something. Remember, by checking every Friday night on the closure of the markets. Okay, if you're checking your weekly candles, this could be good for you. Like it's good for you in order to get prepared for Monday, for the fresh week, from the coming week trading. So significant breakouts on the weekly time frame could help you identify the overall direction, or potential direction actually, of your assets in the medium term. So okay, of course, gold drifted significantly this week, but this candle has not closed and will close tomorrow night. So this is when you should probably see it. But we can clearly see for the time being that the asset it was in a sell-off the last 3 weeks in a row, and more precisely this week, with gold drifting from 1916 down to 1700 territory. So currently it's at 1781, below its 50, below its 20 simple moving average in the weekly chart. However, as you can see, just quickly, briefly, if I zoom out, okay, you can see that this barrier, this 1900s, is a barrier that hasn't really broken since November 2020. It's a strong key resistance level. Now, it has flipped to the downside, breaking the midpoint of this range. So by calling a range, I mean the area in which the gold is moving since the last quarter of 2020, since November 2020. So it is currently trying to break the mid area of this range, of this ranking market. So 1782 for the time being. However, momentum in the weekly chart remains neutral. So okay, I can see your question, guys. Don't worry. Okay. So let's flip. Okay. Any update on gold, please? I will at 1840. Shall we hold? I cannot advise whether you should hold it or not, but let's see the technicals. Focus on what I will explain right now from technical perspective, and you can take your own decisions, steer Zakuma. Uh, so Daniel is asking the same thing. Any update on gold? Will there be a bullish correction? So, Daniel again. Vicky again for gold. Okay, so let's see gold. As I mentioned, it has one of the biggest, sharpest declines that we have seen on gold in a weekly basis. So we have 5 days in a row. We have seen a decline for 5 days in a row. This can be measured at around. It's actually, if I'm counting this properly, $130 lower. Okay, breaking. This is the daily chart, guys. Okay, breaking the 50 and 200 day moving average. Just to double check whether I have both. Check something. So exponential looks to provide a better, so cross bearishly over here, cross bullishly over here. They're a bit delayed. Okay, I have my exponential moving average over here. It broke everything. Actually, it's moving below all daily moving averages, even 50 to 100, 20. And if you just watch closely, you can see that it is obviously in an oversold condition. It has closed outside. It is moving outside Bollinger's for 12 days in a row. However, as we can see, if we monitor Bollinger's, we can see that they keep extending lower. Okay, they keep extending lower, along with RSI, which is flirting with 30. So there is, if it crossed 30 and if it's still pointing to the downside, there is further area to be covered in the RSI indicator over here, while stochastic has actually crossed 20, crossed the 20 oversold barrier just yesterday. So there is still some negative bias, some selling pressure for gold according to our momentum indicators and the actual price action, because you can see how big these candles are without long tails to the upside. So without a big fight of bulls to gain back the control, not for the moment at least. So okay, MACD remain neutral. We don't have a confirmation from for MACD in regards to the outlook of gold turning from positive to bearish, but RSI and stochastic looks to have still some they still pointing to the downside with some area still available for those according to these two indicators. While don't forget about the candles, what the candles are telling you. Look how big these bodies are. Look how big these tails are. And if I just apply my Fibonacci as always, you can see that it went down, it broken. So it broken today the 50% reversal point. So the 50%, more than 50% of what had been gained the last 2.5 months, it has been reverted. And so the next key resistance level that could provide some kind of a floor, some kind of a support to the gold decline will be the 61.8, which anyway is the strongest Fibonacci level, the strongest retracement level that we have, and that leaves the next support area at 1766. So nearly $20 below the current price. So you ask whether gold will turn. I bought at will there be a bullish correction on gold? Okay, as I mentioned, the daily chart remains remains in a negative outlook. So if you're asking intraday, we're going to have a look right now. So intraday, so let me zoom out. Excellent. So let's focus to the intraday stuff. You can see that MACD is increasingly sloping lower and lower, actually sloping southwards. RSI is below 30 and a bit flattened. Stochastic is actually flirting with 20, so it's trying to cross 20 without, however, a confirmation yet. So for the time being, this decline, along with the negative MACD and the increasingly negative MACD, the RSI, which is at 16 and still pointing to the right hand side, all these imply to a neutral to negative outlook intraday. Only, so if you can see also my fast moving average, the 5 and 9 exponential moving average, that they keep pointing to the downside. They have not even flattened. So for the time being, the bears looks to be in control of the market. So if I put just this intraday Fibonacci level, let me get rid of the daily Fibonacci just to clear a bit this mess. Okay, let's get back to the 1 hour chart. So on the flip side, a bounce needs to actually a correction, if you prefer, or a reversal of these losses could be seen if the asset managed to get back above 1800s, and more precisely the 50% reversal, the 50% retracement level since yesterday's decline at 1817. So and you need to monitor, if you are interested in the intraday stuff, you need to monitor also your indicators, or a potential bullish cross of your fast moving average, or a bullish cross of your KND stochastic indicator, the stochastic lines as well. So the asset keep extending lower for the time being, with an overall, actually an intraday negative, with being actually in a negative outlook intraday, while that remains the case in the medium term as well. As I said, the next support area is at 1766. Okay, so that was on gold. So let's get back to Ross. I'm not sure whether you are asking about gold, but yeah, if an asset is outside Bollinger's in the time frame that you are actually looking, then theoretically a move outside Bollinger's, if it's outside the lower area of the Bollinger Band, is considered to be oversold. However, it's good to combine this analysis with your indicators to check whether there is further steam to the downside, or whether it has stalled, it has run out of steam. So that's why when we had a look on the, where is it? In the dollar index, was it dollar index? Sorry, what I'm looking. Come on. So we're looking initially. We're looking dollar was the very first asset that we were actually watching. So, for example, Okay, the dollar actually over here, it's outside the upper Bollinger, so that's considered to be an overbought condition. But you need to keep an eye on your momentum indicators on whether there is further steam to the upside still, okay, or whether has run out of steam, whether this rally is ready to end. So, for example, despite the overbought condition over here in the dollar, in the daily chart, the stochastics are keep pointing upwards. RSI, however, hasn't really managed to cross above 70 for the time being. Neither the signal line of MACD level over here. So that's something that adds a bit of a neutral stance in the dollar. So let's get back to 4-hour chart to see what is going on over here. So bullish cross on MACD, RSI at 70 and sustains a move above 70. Stochastic flatten, sustaining a move above 80. So you can see that parabolics are far away from the actual price and below it. So this is another bullish indication. So even though in the daily picture the asset look overbought, but it's not clear whether it will continue to the upside or whether we're going to see a pullback intraday, we can see that bulls are still in control. So yeah, let's continue. Euro dollar, yes, of course. We have actually confirmation for inflation in Eurozone today, even though it didn't really had any impact again on the euro, because actually it was a final reading anyway, so it was just a confirmation. So this is euro dollar. I will start with the daily chart. Okay, okay, this is a daily chart. Euro dollar has been in a decline since the beginning, actually since the end of May. Okay, but what triggered the attention since yesterday, it was the breakdown of 121 level, which actually it was the immediate support for the whole May. And so 121 round number, May support, along with the breakdown that actually implies to the breakdown of 15-day moving average as well. So this even though from a fundamental perspective this sell-off came on the hawkish FOMC, however from the technical perspective this was our immediate, actually a key support level. So this decisive breakdown since yesterday of 121 could have attract more sellers in the market. So it was a key support level, as I already mentioned. And more precisely, you see, it forms some kind of a rounding top. Sorry. So you see, we have seen in just a day the breakouts of three significant support areas for euro dollar, for those that they were actually interested in the more near term outlook of euro dollar, even though this is a daily chart, so that has an impact on this on the overall outlook of euro dollar. So breakdown of 121 round number, breakdown of the support area that we have seen since May, and on the closure yesterday, actually today more precisely, it managed to cross the this 119.89. So it managed to break the 120 level, 000 number, key psychological level, but also a support that it remained untapped since April. So you can see that over here we have already a confirmation of a bearish bearish rounding top broken, with the asset extending lower. and actually retesting for the time being the 200-day moving average, while on top of all this, it has already retested the 61.8 Fibonacci level since March rally. So the asset is in a sharp sell-off, with the next support area, which was already retested once at 119.20, the 61.8 Fibonacci level. A break below that level, it could find support, or it could retest, if you prefer, the 118.35, which is a support that has been seen back in May. Okay, so if we just check what the momentum indicators are telling us, MACD turn to date into a negative territory, even though the signal line is still at 0. So we don't have a bearish cross yet, but RSI also extending lower below the 50 territory. So actually is in a continuous decline since 20th of May. So the same stance for stochastics, in a continuous decline with some corrections, but actually these are just some corrections in the near term. So euro dollar outlook in the medium term, it's negative. Next support area 119.19, and the very next one, if that breaks anytime this week, is a 118.35. If we shift to the daily chart, you can see that the asset reached to an oversold condition. This is a 1 hour chart. Reached to an oversold condition after the Fed, but managed to consolidate for the whole Asia session. Okay. However, on the European Open, further selling pressure has been added that drifted euro dollar below 120 and actually to 119.23 low. As I said, this is just fresh selling pressure due to the European Open, rather than any impact from the inflation, the Eurozone inflation data that have been released in the morning. Actually, the data came actually confirmed at 2% in a year basis. We have seen that they have bought some kind of a slightly upwards revision, but for euro dollar, the main driver remains to be the buying, the dollar buying, as I mentioned earlier. So we have euro dollar over here, sustaining for the time being, finding a floor at 119.23. So sideways for the time being. Stochastic, interestingly, so I'm not sure whether you can see it. Actually, you can. Let me add a double stochastic, so you can see my stochastic in the intraday basis. So you can see that is consolidating, right? And indeed, the fast moving averages 5 and 9, exponential 5 and 9, have been flattened, confirming this kind of consolidation. However, both RSI in the 1 hour chart and stochastic have managed, come on, to, I think you can see that. So they have managed to improved slightly, with stochastic actually crossing above 20, and RSI, however, pointing to the upside, but without a confirmed cross above 30. So if these two indicators manage to actually confirm or form a bullish cross and a bullish and move above away from their oversold area, this could intraday in the very short time frame could reflect into a rebound on this from this 119.20 support level. But that's just intraday, as I already mentioned. For this decline, for this drift to be reverted, we need to see the asset gaining back at least the 120 30 territory, 120 above 120 30 territories to reverse at least the 50% of the losses that we have seen so far, actually since yesterday. So and we have covered euro dollar. Why dollar yen is going down? Okay, I assume this is a profit-taking condition, but I need to confirm because, as I said, we were in a risk-on condition, something that complies with the jumps that we have, with the jump that we have seen in dollar yen, in dollar Swiss. So the safe havens have been seen depreciating against dollar on the risk on environment. So we have seen dollar yen boosting higher, posting a high at 110.80 territory. But so far today, actually before the US Open, we were in a consolidation mode. So sideways between 110.63, but eventually on the US Open, we have a breakdown and a pullback lower, a breakdown of this immediate support level, and a reversal of nearly more than 40% of the gains that we have seen since yesterday. So I'm not really sure whether there is something out from news perspective that I missed, but this looks to be okay. This looks to be some kind of a profit-taking situation over here, along with the anticipation of Bank of Japan tomorrow morning. So this is what looks to be the case. That's why you need to put your stop losses on. You need to do your homework and place your support and resistance levels, because the breakdown of 110.50 or even the 23.6 Fibonacci level over here and 110.57, it could be your initial alert for a potential pullback and a reversal of this rally. So I'm not sure whether I'm missing something, but I will double check in my newsfeed whether there is anything else that affecting the dollar yen, but this looks to be some profit-taking situation. Yeah, it looks to be just technicals, to be honest. Cannot really spot anything else. Double check. No, cannot really see something else, I'm afraid. So yen turned stronger on the US Open, broken this immediate support level at 110.57, continue to the downside for a second hour in a row. So next support is at the confluence of 50% Fibonacci level and 50 exponential moving average in this 1 hour chart. We have also a confirmation of this bearish turn. If you see the 5 and 9 exponential moving averages in this 1 hour chart, they have been bearishly crossed and they keep pointing to the downside. Along with a bearish cross in stochastics, Can you see the bearish crossing stochastic? Here it is. Bearish crossing stochastic, and then they keep pointing lower. It hasn't managed to cross the 20 area yet, so still pointing lower. RSI is quite close to 50, so it's still a bit neutral. But yes, the fast MA is along with the stochastic, the bearish crossing, both of these indicators imply to some selling pressure for the time being on dollar yen, with the next support coming at 110.29, the confluence of 50 exponential moving average and 50% Fibonacci level. So that's ATR is at 0.1143. 1143. Let me just so we already moved by 13 pips lower. Okay, while the 30 minutes chart, so 1, 2, 3 down, trying to recover in the last 30 minutes session, remains. However, the fast MAs are keep pointing lower. RSI flatten, MACD turn negative, so parabolics are remain to the upside, suggesting signaling a bearish signal. So intraday picture remains under pressure with the next support at 110.30. Daily, the asset is in an upwards, in a smooth upwards trajectory since April 2020. So if I put my regression channel on, you can see that slowly appreciated, posting some higher highs, higher peaks, and lower higher lows. Remains to the upside. It's back to March highs, while for the long-term trades, medium-term trades more precisely, a break of 111 could open the doors to the last year's highs and the 112 territory. But that's just in the long term. Let's see other questions. Showed lower yesterday after the because it moved lower because of the stronger dollar. This was the case. Okay. We have already stated the support and resistance levels for euro dollar. Oh, you said the resistance level. So yeah. Okay. In the intraday, in the 1 hour chart, so let me just clear a bit this mess. The next, okay, the immediate resistance area is at the mid of the Bollingers, 119.78. While a strong resistance area, I don't have my pivot points on, it's definitely the around 120 territory. In the next week, okay, everything depends. So you're asking about what's the outlook for next week in regards to gold. So okay, obviously depends how we will close the week. Okay, so for the time being, the weekly candle is below the 20 and the actually the 20 weeks moving average. So a closure to tomorrow on the week, if this weekly candle closes tomorrow decisively like it is right now, below the 20-week moving average, this is turning the weekly outlook from a neutral, that was the case for the last 1, 2, 3, 4, 5 weeks in a row, into a negative one. So if indeed this is confirmed on tomorrow's closure, then the asset could, if the asset remains to the downside, it could get back to the lower line of Bollingers and the low area back in the first quarter of 2021. So I'm referring to the low 118 or even 117.80 territory. So yeah, keep an eye on how gold will close next week, on whether it will gain back some ground and close above 20 week moving average, or whether it will stay below the 20-week moving average. So I assume you're referring to dollar yen. Very sad. I think I let it down 109.30. Very sad. Let it down one. Not sure what you mean, but let's see your previous question maybe. It's going down. Oh, okay. Actually, I don't understand what you mean. Let it down to 109.30. 109.30 is quite far away. It's like back to last week's lows. So there is a lot of way until the asset could potentially move to that area. So we need at least to see a breakdown of one of 110.30 closure today or tomorrow below the midpoint of this bullish candle in order to suggest that it could continue moving lower. But for the time being, the overall picture looks to be positive, the daily picture for the asset, with today's pullback to be a correction. Intraday, however, it has broken this immediate support level. It opens some doors to the downside with key support level are 110.30. If 110.30 doesn't break, okay, if this level remains untapped, we don't see a breakout, decisive move below that level, then the asset remains in a neutral to positive territory. $93. Let's get back to dollar then. Dollar. So okay, so you're asking for a medium term to long term. Actually, medium term. No, that should be medium to long. Yes, yeah, because 93 is an area that we haven't seen since the end of March. So apply your Fibonacci on, monitor how it will. So this is okay. How we will close the week tomorrow. And so, because if we manage to sustain, okay, and move above the 50%, so above the 91.50 and the 200-day moving average, okay, if we manage to sustain and move above it, then this could turn dollars. This could confirm dollars outlook into a positive one, even though the labor market remains a downside risk for the dollar. Okay, so we need to be a bit patient and see what's going on over here. However, yesterday's move was definitely huge, breaking significant resistance levels, but the 62 area, 91, 92, or if you want me to be more precise, 91, 96, which is the 61.8 Fibonacci level, is the key resistance area that could help us understand whether it has the potential to get back to 93, as you are asking me, Rajar. So 61 is technically the strongest resistance resistance level for for the time being. So yeah, 93 the dollar could retest 93 area or even appreciate it up to 93.45 if we have a break of the 61.8 Fibonacci level. For the time being, it looks overbought. So 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 it needs some kind of a correction, either a consolidation or a pullback. We will remain patient and see and monitoring the dollar index. So okay. So okay. So we have covered gold, but you're asking again for gold and silver. Okay, then I will finish with gold and silver again, even though we just covered three categories, the three assets today. So gold and silver, you're asking. Do I have silver somewhere? Should, yeah. Here it is, side by side. So let's start with silver. I already mentioned that what happened this week actually added a lot of pressure on the commodities. So we have seen here is actually the silver. Yeah, this is silver which actually broken similarly with what we have seen in gold. The 1 month support area at 90 at 27 level, which coincides with the 161.8 Fibonacci extension from the rebound that we have seen last week, and coincides also with a breakdown of the 50-day moving average. So that breakdown yesterday actually attracted more sellers today, which managed to pressure silver even more and take it back to the May's support area, the May's lows at 261.8 Fibonacci extension and the low 26 area. So let me just get rid of this Fibonacci. Okay, and I will use this one for for finding support areas. So apparently this bounce triggered on June provided some immediate support levels for silver. So the 61.8 Fibonacci extension, the very first support area for silver, broken yesterday, and the 100% broke today. So the next immediate support for silver, it comes down to 25.65, which interestingly, it was a support that had been held for nearly the whole April. So for, just double check something, for 2 weeks in a row. So this is the next support area for gold. The indicators are all negatively configured actually. The only one that it remained neutral, even though the histogram has already turned negative. You check the numbers over here, but the signal line is still above zero, is MACD. But RSI turned below 15 and keep pointing to the downside. Stochastic turn again lower, just cross the 20 barrier. So negatively configured momentum indicators, along with the sharp sell-off, along with the extension to the downside of Bollinger's, the move out below 20 and 50-day moving average, and the bearish parabolic SAR imply to a negative outlook for silver. Intraday now. So Some consolidation has been seen in the Asia session, then sell-off continued during Europe session and extended in the US session. So you can see that we have a continuous decline with MACD negatively configured, RSI at 16, but no reversal and still pointing to the downside. Stochastic the same. Fast moving average are keep pointing lower. So intraday and daily time frame uh, are suggesting further bearish momentum. So, okay, pretty much it. Yeah, key support 26, 25, 65. Sorry. Confluence of 160, 161.8 Fibonacci extension and the support area, back in April. So just to have in mind, if that breaks, then the very next one is coming down to the 200 or even actually 24, 25 level, 2480 to 25 round number. And a support has been seen back in March, beginning of March. Okay, so that was on silver. Gold, pretty much the same picture we have seen. We have covered gold earlier. A lot of pressure, MACD negatively configured, RSI still pointing lower. Stochastic is trying to recover, but we don't have a bullish cross yet in order to monitor on a potential appreciation, a potential rebound of the asset intraday at least. Keep extending lower. Fast MAs are keep pointing lower. So negative intraday picture for gold. And the daily one, it has broken some significant support areas. Keep extending lower. Next support is 1766. While the breakdown of this level could open the doors to year's lows. So that was pretty much it, guys. Any questions? Any other questions before I call it a date? Any other questions? So tomorrow morning, actually tonight, quite early in the night, it's at, if I'm not mistaken, it's at 12 o'clock GMT, 3 o'clock our time. If I'm not mistaken, I'm not sure whether I'm watching GMT over here or server time. But we have Bank of Japan. Okay, we have the key event for tomorrow is Bank of Japan interest rate decision and conference, along with UK retail sales. Bank of Japan is not expected to change anything in this policy. Is not expected to change the interest rates or this accommodative policy. However, it has, as we have seen in the last meetings, there is there are a lot of odds that it might extend bond purchases. This will remain in focus. So the policy meeting actually started since today. It's a 2-day one, but tomorrow we're gonna have the conference as well. It has already there was a newspaper this week stating that a 6-month extension of its pandemic relief measures are expected. This is what is expected from Bank of Japan tomorrow. A confirmation in regards to an extension of its relief measure, of its bond purchasing, So overall, the fundamentals, along with the fact that yen is a low yielding currency, and it's the fact that actually the dollar the US yields are actually advancing over Japanese yields is something that could could keep the dollar yen to the upside. So growth and yield differentials are strong supports for the dollar and yen, despite the performance of stock markets or any underpinning of yen due to the safe haven demand. So that's pretty much it. Thank you very much for attending. Hope you're having a great day ahead. Take care. And I'll see you again tomorrow with a weekly roundup with Stuart. Thank you very much. Have a great day ahead. Bye bye.
Bravo.